the presentation today that I'd like to just have a discussion about is about this idea of whether or not globalization is dead. It's become very common for people to somewhat flippantly say that globalization has ended. And there are some indicators for that, but there are also a lot of reasons to think otherwise. And I'll run quickly through a presentation, then hopefully we can have a conversation on that. So again, the idea here is has globalization ended or not? And the sub-theme of what we're talking about here is risk avoidance, and why I think the world is in a situation or a position where people are generally avoiding more risk than is good for them. So back about I don't know, 15 years ago in 2008, trade as a percentage of GDP peaked at 64% of global GDP. And so many organizations point to this as the end of globalization. This is the global financial crisis happens at this point, and people begin to retrench a bit, and trade in goods declines basically, or has never gone above that 64% of global GDP. So many people will point to this as the data behind their idea that globalization peaked many years ago and has been in decline. But as you can see with the overall number, which is the blue and the red together, which is trade and then world GDP, the trade number continues to basically grow, but the GDP number grows, and so the base number is, it's 53% in 2020 versus 64 in 2008. So people talk about what I like to joke about, what Gwyneth Paltrow says about unconscious or conscious uncoupling, and that's sort of the snippet on how people are looking at the world today. De-risking, people talk about, and deglobalizing. But I don't think you should take Gwyneth Paltrow's advice on global trade. So one of the things that's interesting to take a look at is why many believe this. And if we take a look at the media that we read, basically everything sells except sort of a neutral or a joyous headline. So anger, fear, sadness, disgust, all these things in terms of its frequency in the media is what people are selling and what we're reading. And so basically everyone has bought into this idea that the world is falling apart. And as you can see from the sort of this is the studies of the media frequency of the general tone and tenor, and this is what we're absorbing every day. Is the future is the sky is falling basically, and so if it leads, it bleeds, and that's what we're all reading. If you take a look, and this is on the left and the right, the only in the centrist piece, which is the green line here, that's the only thing that's sort of stayed about the same over the last 25 years in terms of media sentiment. So everyone thinks the world's falling apart in terms of the media that we're reading. If we take a look at, I think, at the baby boomer population and the ones who are primarily still in leadership positions, like, so if you take a look at the average CEO is probably 60 years old. The average congressman is about the same, 59, and the average senator is about 62. And for their philosophical view basically falls into one of these three buckets. It's New Age, social justice, or environmentalists. And the two of these, the social justice warriors and the environmentalists, are basically focused on anti-capitalist dystopian behavior and then therefore de-risking. So what I'm saying is that the broad philosophical framework, the broad sort of intellectual framework in the media is all having us say that it's time to take our eggs and go home. But is the world really deglobalizing? That's really what I'd like to talk about today. I just wanted to set the stage with some of the sort of psychological and philosophical backgrounds of how people are thinking about this problem. Um, and I would say it really depends on how we're defining um, what is globalization. So, as you can imagine, in the information age, the top line there, information has been growing across borders. Capital continues to sort of be at the same pace. And then overall, if you take a look at that central number there, it's basically the same. So the trade in goods is what has fallen, and people movement around the world has been relatively steady, a little bit up, but then because of the pandemic, you'll see later, some other statistics will show that it goes basically flat at this point. So the two important points to take a look at are capital and information. But trade, in a sense of absolute numbers, as I was talking about earlier, continues to grow. So on the right-hand side, you're seeing trade as a percentage of GDP, right, over that time period from the 70s to 22. But then you're also seeing the absolute number in billions of dollars. So we need to keep in mind the world continues to grow its global GDP, and that so the absolute number of goods and services moving around is actually increasing, continues to increase considerably. Capital, as I was talking about earlier, you have foreign direct investment, foreign portfolio investment, bank loans. They're all sort of moving around at trillions of dollars per year. The amount of capital in terms of what the numbers on the left are basically showing is that its percentage of the total is still about the same. But these are significant numbers we're talking about, trillions of dollars a year in each of these areas of FDI, foreign portfolio investment, and bank loans. Information is the area that's most interesting in terms of, again, it's sort of not surprising that we're in the information age and that which continues to move across borders. If the sort of the exponential curve there on the right showing data, terabits per second moving around the world. And then this other thing on that slide, the IP exports, what we figured out is that rather than moving goods around, it's better to sort of own the IP of the iPhone or own the IP of some widget inside that rather than just moving the goods around. And that's one of the reasons that we're not seeing as much trade in goods. Talked about people. People flows have generally, we have that big drop after the pandemic, but international students and international migrants continue to move around. So my sense is that we're probably going to go back on trend, a little bit of growth in people moving around. So the interesting part of the trade at this point is it's also moved into services. So the overall GDP of the world is sort of growing at 2 to 3% over this time period, and trade and services has been growing at 5%. And within the trade and services, you'll see that some of these are growing a little bit faster. Travel services are below par, I'll say. Transport's about even. Commercial services are higher, and then other commercial services are the area where again it's growing at almost double the global GDP. So that's kind of what it looks like in dollars across 2023. So you're talking about $8 trillion of services moving around, which is about 10% of the trading goods. Now, as far as the U.S. trading partners are concerned, you'd say that, oh, well, this trade war with China is really killing us. But this piece on China here, it doesn't show up on this, but basically the majority of the Chinese trade is this bar here. It's all kind of light blue, but this bar right here And you'll see that it's basically remained the same. So everyone's saying we're sort of moving away from China. Well, not that fast. And then our major trading partners, this on the bottom is the other section, and then you have the EU, Canada, Mexico, and China that makes up about 60 to 70% of global trade, and it hasn't really changed very much. And frankly, it probably won't change very rapidly because traded goods are very, very sticky, very, very difficult to move supply chains across borders. So this is all just to say that basically the people we've traded with over the last 20 years are probably the people we're going to be trading with over the next 20 years. And it's probably going to be about these levels, right? It's sort of, it's not moving around very much regardless, except the big drop there for the pandemic. So this idea of nearshoring, right, it's significant, but as I said, trade is very, very sticky. So if you take a look at this time period over 21 to 23, the direct imports from China have dropped by about $26 billion. But a lot of that trade is just going now through places like Vietnam as finished goods. The base materials are coming from China and they're getting put together in Vietnam and Malaysia, Thailand, and these types of places. So my sense is that on the good side, we're not going to see much of a change. With India, I think that the services is a really interesting area to look for India. It's almost double. It's more than double the trade in goods that we have, the imports that we have from India, from the United States, and it's doubled from 2013. So India's really been the dark horse in this race.
Francis, do you mind if I ask a question?
Certainly.
Can we go back to the previous slide? And in light of what you just mentioned about India as well, I see that most of those bans aren't expanding significantly. And I see we had the dip in 2020, which was probably more likely than not COVID. That impacted everyone globally. But then after that, coming out of it, we see it going from just slightly under 800 up to over, a trillion.
Mhm.
Is that growth or the expansion primarily due to the inflationary effects of covering from COVID, or is there actual growth with the exception of India? Because I know you mentioned India doubled in size, and I don't know which line item that would be in here, but I don't see the bandwidth of too many of these changing significantly, but I see a substantial increase. Is that inflationary impact on top of a growth that's embedded in here? Can you explain that
Yeah,
a little
so
bit?
it's because it's priced in dollars. So
Hmm.
so you're going to get the inflationary impact of that. Yes. Um, so I don't think that the number of phones or the number of couches we're not buying that many more these days.
So the growth is fairly stable, which I think was what your point was, but the increase is inflationary from this chart. But India being the exception, India, we have substantial growth with them as a trade partner, correct?
Correct.
Okay.
Correct. And again, particularly in services,
Yeah,
but
in services.
even in goods, I think that India has enormous growth potential. Um, so it's a very, very difficult market for sourcing of goods. Um, and so many people don't like to travel there. It's very difficult to travel, and that's difficult place to do business. But it seems to me that that's Vietnam for me it's where a lot of people have been focusing their energy lately, but it's become way too expensive. There's not enough employees. Um, there's not really enough depth, and they were, we all forget that they were sort of decimated by a series of wars that didn't end that long ago. So um, I think Vietnam has had its moment in the sun, and now a lot of people are looking elsewhere.
Okay. Yeah, I appreciate the insight. Thank you.
Hmm. Um, and anyone else, feel free to jump in whenever. It's always better if it's a conversation. Um, Okay. So, global trade for me is about two things. It's the overall growth of the economy, and then the growth of GDP per capita. And this idea that the average GDP per capita in the world is now $12,000 is significant. So I find it very hard to look at numbers like these and then sort of conclude that we should all retrench behind our own castle and no longer do global trade. Okay, so hence the other point that I'm looking to make this morning is that most of the companies that I see are increasing their risk profiles because they're positioning for far too much risk avoidance. And then I'm borrowing from Howard Marks for a lot of the next portion of this, and one of his recent works where he basically concludes that too much risk avoidance is a form of high risk behavior. So one of the things, if you sort of simple investment thesis, and this includes, your portfolios of people's companies, is that if no risk, there's no return. And so I think that there seems to be confusion about risk control and risk avoidance. These are two different things. We can either have free range children or we can have no range children. And if we have no range children, then they're probably still going to be living with us when they're 30 years old. So it's very similar. So I think that too many people in organizations, again, are risk averse. It goes back to where is the leadership in terms of their age, right? The 60-year-olds. I think it's going to be very, very interesting to watch, both from a presidential perspective, when we move beyond baby boomers, what are we going to get? And then also from the business perspective, when we move beyond the baby boomers, and what are we going to get? So we know the future is uncertain, but basically the question is can we define the risks, and then can we just determine what risks we're comfortable with, and then take a leap on those risks? So I thought given that I live and work primarily out of Shanghai, I thought I would share some thoughts on what about China. And so there's a very interesting study that was done by the Mercator Institute, where they came up with this idea that the future from China was shaky. And a lot of people look at China and think it's this authoritarian, very powerful country. But there's a lot of us who also look at it as being a very, very shaky, living in a very, very shaky place. And the shakiness is the instabilities are driven by what's written there on the left, which is basically demographics, debt, deflation, and geopolitics. And there's a counterbalance to that, which is the stability of enormous human and physical capital, fantastic infrastructure, and a very, very deep supply chain. So when I think about the future of China, I think that this framework here can be quite useful, is that China is sitting on this platform which is very, very shaky, and that its direction, if it were to move, it could move with one of these four directions. So if you go, many of us, the first question I hear very often in conversation is, well, what happens in Taiwan? Right? So that brings us into the South China Seas if we have war in the South China Seas. So that moves us into the confrontational area. And so my sense is that in that space, we have mostly gray zone conflicts, which make sort of military conflict or kinetic military conflict feel very increasingly likely. And in this world, then we fall, if we do go down that path, then the world sort of bifurcates or trifurcates into many, many different regional economies. And then we have the decoupling, de-risking, and Gwyneth Paltrow will have her day in court. So China and the West, this to me is something front and center, but the probability of this is probably on the lower end of where I sit. Also on the sort of lower end of where I think is a likely outcome is the successful China. And in the successful China scenario, we basically have Xi Jinping succeeding in achieving most of his ambitions, both from a shift to technology to a breakup of the world's institutions to be aligned with the United States and be more aligned with China. So this is all-encompassing party and state control, um, technological independence for China, and then global influence rivaling the United States. For this to happen, I think you'd have to have a significant crisis in the West. So we'd have to go back to burning our cities and shooting our presidents like we did in the 60s. Um, and then the same thing probably would happen also in Europe in some shape or form. And there'd have to be some very, very tangible Chinese success stories beyond just, the $10,000 EV. We'd have to talk about like maybe nuclear fission or military prowess and better submarines or better drones or whatever. And then a successful power play with what is affectionately being called the global South. So that's successful China is a scenario there. Going to the other side, the reform China, which is not something we hear a lot about these days, but if we remember that China's growth was primarily driven by reform policies, which began in the 80s, there's a pretty powerful coalition of leaders in China who want to go back to reform. And so a reformist China would be one where there's some type of internal crisis. So either probably something related to this sort of socioeconomic crisis, maybe similar to what we saw in the white paper revolution of a few years ago, where sort of precipitated the end of the lockdowns was a very, very small demonstration to say we basically want this to be over. And so that's a political course correction. And so it would be a warming of relations similar to sort of a detente like we had in the 70s between Nixon and Mao, or then later on between Clinton and actually from then on it was everyone was sort of happy and loving each other. So I call this reform and opening up 2.0, and that could be a return to very, very rapid growth. Reform policies, if they were re-implemented in China, could lead to 7 to 8% growth over 10, 20 years. There's enough to be gained by reforming the economy. The thing that's really holding China back is this insane need for control. And then the one on the bottom there is restrain China. And this is basically sort of a slow holding back of China, partially because China doesn't have the technology that they need to grow. But Beijing's, let's say, in this area, fails to diversify the economy, fails to maintain growth. They do not achieve technological independence, cannot build external coalitions. Maybe the war in Ukraine goes bad and the relationship with Russia goes south. And so their whole pursuit of this global power play fails, and then China just kind of fades into the background. So this will be this will be online afterwards. So if you guys want to take a look at this, you can do that later. And also, I would say if you want to read further on it, this Mercator Institute study was really well done. So where do I think the most likely scenario is a combination of all of the above, and that was that centerpiece on shaky China. And so reading the headlines there, basically politics revert to a centralized state, geopolitics simmer but don't boil over, global institutions make room for China, and then militaries, politicians, and pundits prepare for war. So the idea, if we go back to sort of the centralized state, um, at this point, reading from the bottom, if not she, then who? It's really difficult to see who beyond she takes control. There's a big party Congress in 2027, and then the social policies are targeting reform right now, the pensions, healthcare, and education systems, but the growth is really just not there. So China is really just trying to hold on right now, but growth at like 4% when we have youth unemployment at somewhere between 20 and 40% in the urban areas. It's a very, very difficult thing to hold together. In the geopolitical sphere, we see this, bumping of ships in the South China Sea. We see all these gray tactics over the skies of Taiwan. But really, what I see most likely as the outcome is that China begrudgingly accepts U.S. dominance. And then the building of guardrails to really control the escalation of the conflicts. My sense in the global institutions area, China is pushing for this alternative world order, and you see things like the Belt and Road Initiative, the Global Development Initiative, this global security, but I don't really see that is gaining much traction outside of Africa. So it's attracting some followers from the global South, but it's limited and really doesn't include security at all. And I think they're just convenient bedfellows at this point, between the Chinese and the global South. That if push comes to shove, if they were forced to choose, that most of them who were worth their salt in either military or economic power would probably side with the United States and Europe, as we've seen with the Europeans already siding with the U.S. over this, choose between me or China. So with the military space, I think that the United States has over this last time period developed a relatively strong coalition with Japan, Australia, and the Philippines, plus other people who are less vocal around Southeast Asia, to push back against Chinese aggressive behavior in the area. So I think that there's pretty high likelihood of some type of proxy war, or some further escalation in military conflict, but I don't see it flaring up into a full-scale sort of world war. So when we think about the levers that are being pushed here, it's basically socioeconomic stress is on the bottom, and on the top, on the left, is control and authority. And so as, let's say, the stresses become more extreme and China's control, or the central control, gets higher and higher, it's more likely that we have a confrontational China. But if socioeconomic stress, and also, I mean, it's interesting on the reformist China, that also spans that whole space, that we could flip into reformist China even when socioeconomic stresses are high or they're relatively low. But it does require less authority and control, and particularly on the part of Xi Jinping. But base case, as I said, shaky China is what we're probably looking forward to. So what does that mean? That's sort of muddling through with little progress but no existential crisis. And what I find really interesting about this is that if that's the case, then particularly let's say, when a globalization of looking at the China market, or how does China play into the global trade space, it's still a significant part of the global economy, and something that all of us will have to deal with for the next 10 to 20 years. My sense, again, if I'll run through some of these points, China's trying to create a walled garden to control everything at this point. But they're struggling to manage many challenges. This economy has been in free fall since the pandemic. It's been in a decreasing growth pattern. Um, Demographics are falling. Job creation is a significant issue. Unemployment is, as I said, 20 to 40% for urban youth, and wage levels have been flat for years. I also think that China's, if you take a look back to 2008, where China had this sort of coming out party with the Olympics, and they were sitting at all the big kids tables. At this point, when they look around the room, they're sitting with the Iranians, the Russians, the North Koreans. Like those are their friends these days, and it's really quite silly, and it's really been a fall from grace. So I think that we're getting some mixed signals in terms of this idea that Xi Jinping is peddling, that that's a modern socialist economy, and that will be one of the leading powers by, I don't know, 2050. But the other side of it is that it seems like growth has peaked in many ways. So I think that this focus on stability and control is really holding them back. So it's interesting to me that so these are some of the factors that I would watch over the next sort of decades. Let's say 10 to 20 years. Where does China wind up, and whether or not it reverts to the mean of its focus? If you take a look at the underlying philosophical and sort of theoretical framework of the country, it falls on this idea that they focus on the exam systems, and all the young children focus on learning how to get into college under this very rigorous exam test, but they're not really learning how to be creative thinkers. So they're might graduate, hundreds of thousands of engineers, but many of them are not very creative. On the authoritarianism is also a reversion to their sort of cultural mean. And again, that holds everyone back because they want to keep so much control, the focus on stability. And the sort of the dirty secret about what's happening in China is that the return on equity sort of for technologies, or the return on investment, is very, very low. So rather than ending on all doom and gloom, one of the things that keeps me interested in this place is that the urbanization growth story is phenomenal. So we're sitting on a sort of an $18 trillion economy, $17 trillion economy at this point. And if the Chinese economy grows at 2%, it's still going to add another 3.5 trillion over the next 10 or so years. And if they go to 5%, then we're going to add almost close to $10 trillion in the economy. What is, even if we sort of slowly move away from China in terms of a source of supply, the trade, it's interesting that the interregional trade is now sort of 63% of China's total trade. So when you take a look at trade chaining, or the sourcing of base materials in China that are then produced in other locations to change the country of origin, like Vietnam, that's what's falling into that 63% area. Where I find the opportunities, which many of, I think, the U.S. brands should be more focused on, is the concentration of wealth in the urban centers in China. So the high income cities in China in 2020, there were 55 of them. By 2030, there will be 93 of them. And that's where the GDP per capita is at about 13,000. And so when you take a look at the number of people that are there, it's a share of the population. We're talking about almost 600, 700 million people, and then 64% of China's GDP. So my sense is that within these cities, there's an opportunity to focus on people, about 600 million people who consume like Koreans consume, given the purchasing power of available to Chinese. And so to me, this is the most, from a globalization perspective, it's still the place where if you're selling an Osprey bag or Lululemon, you can open 180 Lululemon stores, which is what's happening right now, or Starbucks is the same thing, and move the needle in terms of growth. And so my sense is that this is, as long as we don't explode in Taiwan or the South China Sea, this is going to be the story that we're going to see in
But
the
these are the
future.
same areas, these urban areas where the dollars are being concentrated, where they have the massive youth unemployment. Is that correct? Is there an opportunity to bridge that gap there? Is that going to be exacerbated as this grows?
Um, well, it's going to hold us back, right? Um, so
Well, it's not ideal, but
yeah,
the concentration of wealth, is it in areas that we have access to that we can influence, or is there, I don't want to necessarily say humanitarian, but are there ways of partnering to help them address these particular areas with it getting a higher youth employment with that capital, the
well, in the absence
concentration of
of,
wealth that's there, building, construction, jobs, whatever the case is, or is it just this is going through financial instruments as being concentrated and consolidated?
I don't see that there's, if the policies don't change within China, it's very hard for people to participate. Um, so recently, policies have changed to open up education, healthcare, and senior living. Um, I would stay away from education because it's got that political connotation to it,
Right.
and I think it's always going to be controlled. But for me, healthcare would be a place, and senior living would be a place where I think that investment opportunities are abundant. Also in differentiated products. So um, those the interesting thing about the urban youth is that the downside of so demographics wise, the one child policy has created a situation where demographics are in decline, right? Population is declining. But those their parents, that single child, their parents and grandparents all have real estate, and all of them are gifting that real estate to their children. They've all lived very, very frugally. Their benefits are mostly their income exceeds their expenses. These are the parents, and so a lot of that youth unemployment is, people talk about lying flat in China, like not doing anything, like screw it, I'm not going to work because it's not worthwhile. Um, and it's not worthwhile because they're sitting on, they're waiting for daddy to die or grandma to die to pick up that asset. So why I was talking about differentiated products, a lot of these people, they're going out and they're buying Lululemon, they're buying a Garmin watch, they're buying, I don't know, a Pinarello bicycle. Like they're spending on these differentiated products, and that is where the United States and Europe, people talk a lot about luxury goods, right? Well, the conspicuous consumption is less fashionable today, and people are a little bit more concerned about the future. So, it's kind of like they're in a situation now where they're focused on the lipstick, right? They're buying the $10 lipstick at this point versus the $1,000 LV bag.
Right, but they're not actually under financial duress. So there's not a high risk of a youth revolution like there would be, like, say, in Venezuela, where there's a substantial 25% of the population is going to uprise because they're not happy with their austerity plans, whatever the case is. They're if they're living within their means, even though it's an inheritance, it's not directly earned, it's a different situation than if they were unemployed and they wanted food, they wanted work, they wanted sustainability. Um, if that's not the case, then there's not a risk for internal conflict that there might be otherwise. That's what I was kind of
Well, they're
curious
not
about.
destitute or desperate,
Okay.
but they're certainly demoralized.
Okay.
And then they look at the future and they say, this is not who we are. Russia should not be our friend. I don't want to be hanging around with the North Koreans. Like, okay, I understand we want to sell to the Africans, but they're not our people. We want to aspire to live in Paris, not, I don't know, Kenya.
Yeah, I do know that China is buying up a lot of resources and populating a lot of cities in South America. Through, again, I've worked in aerospace. I see a lot of these villages that are popping up that are in resources, mining in particular. China's investing a lot in foreign assets in South America and Africa, and they're moving huge portions of the populations to support those cities and infrastructures. Um, I don't know how that's going to play out in this globalization, but I've seen that over the last 10, 15 years increasing.
Yeah, I mean, so the question is if you take a look at it from a Latin American perspective, um, do the Brazilians and the Argentinians do it's a client relationship for them with China. In a geopolitical sense, they're sort of agnostic, right? If if there was a war in the South China Sea, they'd still try to do whatever they could to just stay on the sidelines and sell materials to both sides.
Both sides. Mhm. Yeah, agreed.
So that's why I'm saying China will have to begrudgingly accept that it's not going to be the leader, um, unless sort of the United States just self implodes.
Yeah, let's not go down that path. Definitely, we don't want to go down that path.
Well, I don't. We've been there before. Like we've burned our cities before. Like we tend to. It's not pleasant, but when we come out the other side, it's normally okay. At least in the recent history.
Again, thank
So
you.
that's the end of my formal presentation. I hope that it was helpful, and if know what else is on your guys' minds. This seemed like mostly guys.
But thank you very much, Francis. I don't have any other questions for him before. No.
Yeah, I'm good. I found that very insightful. I really appreciate the presentation, Francis. Thank you.
So, Fran, one of the things you seem to be saying is that China could do better if it adopted more democracy in the Chinese style.
Yeah, it's interesting. I don't know that it necessarily has to be democracy. It just has to be reform.
Right.
And it's really about economic reform. It's deregulation. So, for example, getting if we take a look at what happened in the UK and the United States, sort of over the 40s to the 80s, where we deregulated certain industries, whether it would be power, telecommunications, you think the areas, transportation, the areas where they think it's supposed to be the state control. What China's been doing for pretty much the last 15 to 20 years is trying to create either overt state control or covert state control. And so if you take a look at the overt state control is sort of the banking sector is all state-owned banks. the covert was sort of what happened with Alibaba and Tencent, where they're ostensibly private companies, but it was a dual. They basically created a duopoly in the industries that they still, so they can control basically just one or two companies by giving them licenses, and then if someone gets out of hand like Jack Ma did, they just cut his head off. And so what happened, what they don't realize though, is that the rest of the countries looked at that and said, well, that's crazy. That's like, Elizabeth Warren saying, Elon Musk, you should go to jail. And then they do that. So the reform really has to be just get out of the way. The stock market has been below 3,000 for coming on 20 years. The index hasn't moved in 20 years. And it's because it's all state controlled. So you have one of the highest savings rates in the world and one of the most dysfunctional financial sectors. There's no decent return on money anywhere.
Hey,
So-
Chris, sorry, go ahead.
So you could unlock the enormous savings of the Chinese. The average private entrepreneur is paying somewhere between, certainly north of 10%, somewhere around 20% for funding, where the average saver is getting 2 to 3%. It's just stupid. So BlackRock can come in here, Goldman can come in here and say, this is how we run capital markets. So those are the areas that it's actually quite simple, but they lose control. So they can't call the shots. And that's the problem, is that they think that they're squeezing this so much that they're killing the entrepreneurial spirit of the Chinese. So none of the companies want to get too big because the biggest companies lose their head.
Hey, Chris, do you have a question, please?
Yes, I do. So Francis, thank you for the presentation. Very interesting. So China's 15th five-year plan starts in 2026 and was recently developed and issued, I think, around about earlier this year, maybe end of last year. Do you see that being reworked and amended significantly, given the current state of the economy and in particular, commercial real estate market?
Yeah, the commercial real estate market's in free fall, and I think that it's hard to judge the ramifications of that when so much personal wealth on the sort of individual level is tied up in real estate, and then people are feeling that real estate, that loss of wealth. You can feel it on the streets in China now that people are not happy. And, China certainly doesn't have a democracy, but it certainly has its pulse of what's happening to sort of consumer sentiment. And so I think that if it continues down this path of complete lack of growth, then this idea of youth unemployment, this stagnation, deflation, all of these things will force the Chinese to change, the administration here to change. And then that's why I'm saying it goes in like one of those where in the slide I had about shaky China, it's like, well, which direction does it go in? It could just, one of my friends that had the belief that China could just be like a camel dying in the desert. It just happens very, very slowly over time. And so that there's nothing dramatic that happens. It just kind of just doesn't do anything really. Yeah. It's sort of self-sufficient in a way. it just decays. So it doesn't have to be dramatic. But I think that there's a better than zero chance that that reform is something we might have to look forward to.
Yeah. I mean, I don't know what the history of revising 5-year plans are, but I suspect that given what's going on with commercial real estate, they really need to find some growth from somewhere, some way to stimulate growth. And they're not averse to spending tons of money, borrowing money and investing tons of money. I mean, they've done that in irrigation systems across the country, and that they could certainly look at trying to create new factories like the US has done with the Inflation Reduction Act.
Yeah.
That they're way ahead of the US on a lot of their green energy investments. And I could see them starting to try to stimulate in other areas to try and offset what's been going on with commercial real estate.
Yeah, but there's the diminishing returns to scale to what they're
Yeah.
doing, and they've if you take a look at green energy, most of the green energy companies are not making a profit. They create waste is what they mostly create by the state-directed capitalism. So one of the things I'm sort of most disturbed by the Inflation Reduction Act is that I think the U.S. has committed the fundamental mistake of becoming like their enemies, and rather than reveling in our entrepreneurship and freedom, we go down this path of state-directed capitalism. And there's a fantastic book by Huang Yasen, which talks about it's the kind of the baseline of what when I was talking about exam stability, authoritarianism, and technology, and it's the Chinese system is it creates enormous waste. So, for example,
Yeah.
People will point to China as having the like 10 times the amount of patents that the United States has. But I would say 90% of those patents are completely useless. But the administrators are being judged. They're measured by how many patents are approved in their district. So you get what you measure. And a couple of years on after the patent's registered, it's never maintained because they got their money, after they got the registration, and they just moved on. And so I think that if China's response to this current problem is to build more bridges, or like if you go around the countryside now, sort of fourth or fifth tier cities, you'll see that they're building out all kinds of infrastructure for either seniors or some education. But that's like building in the Ohio River Valley in the 70s when everyone was leaving those places. So it's really quite silly. There's a lot of bridges to nowhere that are being built right now. So I think that the state-directed capitalism for China would be postponing its demise.
Yeah, I mean, there's obviously a fundamental weakness in any society that's directed by government-led investment rather than entrepreneurial, commercial capitalism, looking at returns on investment. I agree with you there, but I can't see China changing though. It's got a structure in place that is there, and it needs to deal with it as best as it can, which may mean that it's going to have suboptimal growth quite a long time.
Which is the camel dying in the desert, right?
Yeah.
Or it chooses to, like its brethren in Taiwan, or like similar systems in Korea and Japan, they choose to have some form of democracy, some form of liberalization, and then
Yeah.
they go down the path of Taiwan. Um,
Interesting. Yeah.
yeah,
Well,
so
one other thing that
it's not genetic, right?
no, no, it's not. And I remember going to Indonesia and being really impressed by the number of Chinese companies in Indonesia that were run by Chinese individuals on very capitalistic bases. Once Chinese people, once they get into a new environment, they can assimilate and learn that environment, and they can be just as good capitalists as Americans and Europeans. It's just the environment you happen to be in.
So
So it wouldn't surprise me if a lot of Chinese companies start to invest in parts of Southeast Asia, just as the US is trying to find alternative suppliers as well in places like Vietnam.
Well, the majority of investors in all throughout Southeast Asia are Chinese. So
Yeah,
if you go to and but what they're doing right now is they're masking their identity too, because of the anti-Chinese sentiment in the United States. So they're masking their identity. But the majority of the factories are, if not overtly, covertly owned by the Chinese. Even the ones
yeah,
in Mexico these days, you're seeing a lot of investment by Chinese-backed companies in Mexico. So the southern part of China and the eastern seaboard of China, down sort of south of Shanghai, um, the Fujianese, the Cantonese-based companies or Canton-based companies, of Guangzhou-based companies, are all still focused on global growth.